Picture this. A finance manager perfectly executes a payment for a massive 1 crore vendor invoice. They pay it right on time, and then they're immediately fired for it. Fired right on the spot. Why? Well, let's dive right into this explainer and uncover the absolutely brutal mistake they made.
It turns out the fatal error that cost this manager their job came down to exactly 20 lakhs. You see, 6 months earlier, they had actually paid a 20 lakh advance to that very same vendor. And when that final 1 crore invoice finally arrived on their desk, they completely 100% forgot to deduct it. In simple words, this absolute nightmare of a scenario is what we call an unadjusted advance. Basically, it happens when you give a supplier a cash deposit up front, but your finance team totally fails to subtract it from the final bill later. The result? A massive, completely accidental overpayment that just literally drains company cash. It's like throwing money right out the window.
Now, to really grasp how easily a mistake like this slips through the cracks, think about something we've probably all experienced, or at least seen: booking a wedding hall. Okay, so you pay a 50,000 rupee advance just to secure the date, right? Then, after the party's over, the manager hands you a final bill for 2 lakhs. Now, if you just blindly write a check for the full 2 lakhs, you just throw away your initial deposit. You have to adjust the bill. You subtract that 50,000 rupee deposit and only pay the 1.5 lakh difference. It seems so obvious when it's your own money on the line, doesn't it?
Well, take that exact same logic and scale it way up into a massive corporate trap. Let's look at a fictional company. Let's call them XYZ Limited. Over there, an employee named Ria places an order for a brand new 50 lakh machine. So here's how the timeline actually breaks down. Back in January, a 10 lakh advance is paid out just to get the order started. Fast forward to June, the machine arrives, and the vendor's final invoice comes in clearly stating total due 50 lakhs. Now, if the company's ERP system isn't linked up properly, the accounts payable clerk simply looks at the bill and wires the full 50 lakhs without a second thought.
The absolutely crucial point here is the brutal math of it all. Because that initial January deposit was left completely unadjusted, just sitting there in a separate accounting ledger, XYZ Limited just accidentally paid 60 lakhs for a 50 lakhs machine. Let that sink in. 60 lakhs! All because of a disconnected system and a routine compliance failure.
This whole double payment trap almost always stems from confusing two very, very different numbers. First, you've got the invoice total. That is simply the full cost of the physical goods, basically just what the piece of paper says. But then there's the payable amount. This is the full cost minus your advance. It's the actual real amount you wire to the bank. They are absolutely not the same thing, and blurring those lines, well, that is exactly where companies just bleed cash.
Because of this exact mix-up, auditors actually have a highly specific term for the ultimate red flag they look for on a balance sheet. They call it the orphaned deposit.
Auditors literally hunt the balance sheet looking for these vendor advance accounts that have been just sitting there open and untouched for over a year. Think about it. If the physical project is already finished, but the advance account is still full and untouched, it mathematically proves a massive failure. It means the finance team paid the final invoice in full and completely forgot to recover the company's deposit. The money was just left there, completely orphaned.
So, what should you really take away from this explainer today? Well, it all boils down to this single, unbreakable golden rule. Never ever pay the bottom line of an invoice without checking the advanced ledger first. Doing so might just save your company millions, and honestly, it might just save your job. So the final question you really need to ask yourself is this: are you actually checking your ledgers before hitting send?